About tech and the markets. Joining me now are Brian Belsky, Chief Investment Strategist at BMO Capital Markets, and Nancy Pryl, the co-CEO at Essex Investment Management and Senior Portfolio Manager. Happy Friday, guys. Nancy, you think that there's still room to run here? Don't get faked out by these NASDAQ dips?
Well, I do, although I think we are in the beginnings of a change in market leadership. We think that stock prices follow earnings growth, and what we know is that in this environment of accelerating earnings growth, accelerating revenue growth, continued fiscal stimulus, that the greatest earnings growth and revenue growth will come from those more cyclically oriented areas of the economy. That does not mean, however, that all of technology is overexploited, and we think there's some very exciting opportunities in the area of semiconductor equipment, in some of the software areas, and some of the Internet of Things areas that are just at the cusp of their earnings recovery.
Now, Brian, a year ago, well, a little less than a year ago, you published a report saying that, you know, there was a lot of opportunity. Where do you see opportunity now? I mean, just playing the S&P did you just fine if you piled in a year ago?
Well, thanks for mentioning that report, John. In that report on March 23rd of 2020, we said the second half of our 20-year bull market call was beginning as the Control-Alt-Delete kind of reset from the overabundance of negativity in March. I still think the stock market is a market of stocks, John, and I think you can own both growth and value as long as you're a stock picker. I think these next 10 years are going to be all about bottoms-up stock picking, and all tech stocks are not created equal. You have about 4 different kinds of tech stocks. You have consumer staples tech, you have secular tech, you have cyclical tech, and you have some of these areas that are clearly overweighted. And Dom Chu did a wonderful job in terms of the prelude to this. Now, again, the high flyers in those areas that are obviously well extended in their valuations, not only price to earnings ratios, John, but price to sales ratios are going to come down. Apple, for all intents and purposes, can be known as a value stock in some circles, believe it or not. And we would continue to maintain positions in those big consumer staples tech and buy on dips, especially the Apples, the Microsofts, the Googles, the Netflixes, and those types of names.
Shepard Smith here. Thanks for watching CNBC on YouTube.